Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equities are set for a positive start for third consecutive session in line with at least the US market. If not for Asian equities, GIFT Nifty 2 is suggesting of a flat to positive start coming in for the Wall Street. Oil has dropped on signs of Israel-Hamas war. Disruption will be limited. That's perhaps one of the positive development. US stocks rose for fourth consecutive session. CPI data eyed. Asian shares surged in early deals following positive trend by Wall Street. And if you talk about FII trend, well, they've been sellers for 16th consecutive session now. Offloaded equities worth around 421 crore. Let's talk about DIIs. They continue to purchase equities. On the buying side, have purchased equities to an extent of 1,000 odd crore, a little more than that. Perhaps the sentiment is ripe for a positive start coming in for the markets. TCS typically has disappointed. A few mixed signals actually coming in from the commentary. We're going to be talking about that in just a bit of the read-through of the TCS earnings for other IT majors such as Infosys and HCL Technologies, which will also be reporting in their numbers today. But essentially, we are looking at some amount of negatives already being priced in TCS. Remains to be seen how the stock actually reacts in the session today. The dollar revenue is perhaps the slowest that we've seen, or let's just say the lowest that we've seen at least in 3 years put together now. So that's a bit of negative coming in. The dividend hasn't been in line with expectation. The buyback has rather been lower than what the street was estimating. So that's a bit of negatives coming in. But what really stood out, we're going to be chatting about that in just a bit. Let's actually go across and talk about the FII skews in the F&O space. Well, they have been a bit of buying action coming in on the index futures and the stock futures. Along with that, they have been net sellers, and there is a big amount coming in on the index option and the bank Nifty option. That's the trend essentially playing out. Let's also talk about F&O ban. What is new in the ban is Balrampur Chini, Hindustan Copper, India Cement. What still remains in the ban is Manappuram Finance, India Bull Housing Finance, PNB, along with L&T Finance Holding. What comes out of the ban, interestingly, is Delta Corp, which essentially has also reported in their numbers. MCX, in terms of what we have for option queues, well, Nifty PCR now stabilizes around that 1.22 levels as compared to 1.3 that we saw in the previous session of trade. These are going to be some of the updates that we're going to be talking about. Of course, we are also going to be talking about the trade setup strategies for the day, along with few stock recommendation with Chandan from Motilal Oswal Financial Services is going to be joining us in just a jiffy. But also let's talk about stocks to watch. The first highlight, of course, as I suggested, would be TCS, where the profit has fallen short of estimate as the economic fears continue to persist out there. Just a basic read-through of the numbers. Net profitability in terms is just up by 2.4%. Revenue is, perhaps up by 0.5% sequentially. EBIT up by 5.3%, and the margins have come in at 24.3% as compared to 23.2% in the previous quarter. Now, the board has also announced an interim dividend of share of around 9 rupees per share. The order win is at $11.2 billion versus $10.2 billion registered in the previous quarter. The BFSI revenue is not that great, up 0.8%. Manufacturing revenue just a 2.7% growth sequentially. Consumer revenue is down by 1%, and the communication revenue also is down by 0.2% for the segment, along with life science business revenue, which is also down by 0.2%. So not much of segmental breakup also, but that's that when it comes to the TCS earnings. But I'm going to go across to Chandan and check with him. Morning there, Chandan. What are you reading through? What is the trade setup looking like for the day? What is the strategy you think one could be taking now for Nifty as well as Bank Nifty put together?
Good morning, Nickey. Thanks for having me. So first, if I talk about the Nifty, we have seen a decent recovery from the lower levels. Nifty has recovered from 19,333 to all the way to 19,850 zone. So bias is slightly positive even after underperformance of Bank Nifty index. So we believe that now higher base of the Nifty will sit at 19,650 and index can head towards 20,000 marks. So with support of 19,650 continue to be with buy on decline stance, momentum will be on higher side. Looking at the Bank Nifty here, we believe some sort of consolidation will be there. index is finding hurdle near 250 exponential moving average. But yes, supports are clearly visible at 44,100 zone. So buy on decline with range bound bias, and support will be at 44,100. Now talking about TCS. So the major support for the counter will be at 3,500, where we have witnessed some put writing activity. Some profit booking was seen in last 3 days, but bias will be positive to range bound. We believe that some more decline could find the stability in the counter because overall Nifty IT index is holding. So positive on the Nifty, conservative view on Bank Nifty, and TCS required to hold the support to take the buy on decline stance here.
All right, that was precisely my next question. Perhaps you seem to be preempted. The question TCS was something that I was going to ask you next. But let's talk about Vedanta. Perhaps a bit of downgrade again coming in by India Ratings now, citing a bit of concerns around, with the way stock has behaved, the cash liquidity risk. Of course, the capex plan that the company continues to have, that's still a downgrade coming in by yet another rating agency. What are you making out of it on charts?
Yeah, so it's very tough to comment on Vedanta. The stock remained under performance. It was continuously making lower top, lower bottom. It underperformed in last couple of weeks, couple of months. However, now it is finding some sort of bullish divergence. Multiple supports are visible, but only look for some bounce. As of now, the hurdle will be 240 levels. So if it bounces, it can go to 240, but it would be tough for me to comment beyond that. So those who are holding the position, keep the strict support near to 220 for a bounce towards 240, and play just only bounce because major bias is still under pressure, and that we need to keep in mind.
All right, Chandan, also your read through for Infosys and HCL Technologies within the IT space. Are you liking anything, or do you think the investors are better staying off these counters ahead of the earnings?
No, I think selective stocks need to be focused. So BSOFT will be one name where we are positive. We are recommending this stock from last 2 weeks, making high tops, high bottom on the daily chart. So BSOFT, one can consider for buying recommendation with support of around 528, can head towards 570 kind of level. Other IT name could be in focus. I'm also keeping radar on KPIT Tech in non-F&O segment with support of 1210. This stock can head to 1280 kind of level. When you talk about heavyweights name, Infosys or other name, then I think some sort of consolidating move will be there. So I'll prefer BSOFT, KPIT Tech in IT basket from small cap and heavyweights name.
All right. Also, let's, Chandan, just stay on with us. We're going to be addressing in the other earnings before we again come back to you. Infosys essentially, okay, let's address the markets open there. We were looking at a positive start coming in. Well, it is a flat start with a bit of positive bias. 0.1% of gains locked in by Nifty 50 in early deals. 19,800 mark, about that level. Actually, it's nearing to that 19,850 level. That's a bit of heartening development out there, given how markets have fared in the last 3 consecutive sessions after the sharp correction that we witnessed in the previous few sessions. So a bit of recovery clearly on the for the Indian equity markets. Nifty 50 perhaps now playing the tune in sync with the global peers. Let's also talk about Bank Nifty. How is that stacking up for you? And also then go across to IT, because that's clearly the theme of the day that we'd be eyeing for this earnings season as it kickstarts the earnings season. Bank Nifty also some amount of outperformance there, 0.25% of gains clocked in for Bank Nifty index, 44,600 mark, about that level. Let's also talk about IT index. Well, it is down and out with losses to an extent of nearing now to 0.5% for the IT basket overall. Let's also now look at TCS before we go on to other sectoral indices, just to see how the stock of the day has fared. Well, we are looking at losses to an extent of more than 1% coming in for TCS. There was a disappointment. Dollar revenue was the lowest in 3 years. Buyback was not in plan. Dividend was lower than expectation. These are at least the 3 disappointments that I could read through in the numbers. Of course, Chandra is going to be talking about it in detail. Let's also talk about what we can see in terms of other sectoral indices. Mid-cap index right now is faring pretty well. A bit of outperformance coming in by the mid-cap counters. And small-cap index perhaps is in sync with what mid-caps could do. 0.6% of gains coming in even for the small cap names put together. Let's also talk about the other sectoral indices, the defensive packs rather. Pharma, FMCG, how are they shaping up? Well, not a bad trade. I'd say a good start coming in even for the names like Pharma and FMCG, which are flashing right there on your screen. Let's also talk about other sectoral indices that we have. Metal, realty, auto, these are some of the rate sensitives that we could be looking at. Well, commodity-based metal index first. Let's just to see how is that moving up. Vedanta downgrade has come in. That's another one for you that you need to keep an eye out on. But metal index right now is in pretty good shape with gains to an extent of near to around 0.5% out there. Auto seems to be faring well. 0.3% gains coming in even for the auto basket, along with the realty index, which is up in trade with gains to an extent of 0.2% for the realty basket. Let's also look at top gainers and the top losers that we have right now on the screen. Well, BPCL, IndusInd Bank and Adani Enterprises. These are some of the top gainers that we have. Hero MotoCorp, Adani Ports and Cipla. Well, pretty diverged trend, I would say. No specific concrete trend that is shaping up in early in morning, at least when it comes to the top gainers. Let's look at top losers that we have, just to see if you're looking at IT stocks perhaps taking a bit of beating there. TCS is right there at the top. DRL, Rasim, this is another one, along with Bajaj Finance, Bharti Airtel and Tech Mahindra. No surprise for guessing there. TCS along with few IT names have made it to the list. Let's now cut across to see if Chandra is there with us, just to have a fair bit of assessment of how the numbers have shaped up, what stood out for her and what can be expected going forward. Chandra? All right, we'll try and patch back in terms of with Chandra in that case, just to see if she's around or no. But let's also look at Infosys. That's the one where it's going to be coming up with numbers. Sales growth is expected to slump amidst muted spending. Now, if you look at the quarterly development or what the expectation are, dollar revenue is expected to be up by 0.8%. EBIT is seen at 8,070 crore as compared to 7,891 crore in the previous quarter. EBIT margins are expected to remain flattish around that 21% range as compared to 20.08 that the company registered. The PAT is seen higher by 4.7% as per the CNBC TV18 poll. In constant currency, revenue growth is seen roughly around the similar levels that we had in Q1, that is 1%. Quarter is expected to be muted. Strong deal wins is expected to lend some comfort on the future growth trajectory. The street expects Infosys to report better revenue growth in the later part of this financial year due to the large deals announced during the quarter. The company in the last quarter remained cautiously optimistic in commentary, remember, but made a steep guidance cut, because of which we saw some amount of sell-off which came in Infosys. As a result, the new quarter unfold. Here are the 5 key metrics probably that should be, probably working with something in the likes of deal wins, the demand scenario. Also, let's talk about HCL Technologies. The shares are up by as much as 22.5% YTD basis. If you talk about just what we have in terms of the expectation, dollar revenue is up by 1.4%. The constant currency revenue growth is seen at around 1.3%. The EBIT is expected to be around that 17% mark odd. So that's another one. Vedanta, just like I mentioned, India rating has downgraded the company to IND AA- on increased liquidity risk, cites material reduction in consolidated debt, unlikely given the significant capex of the company. It's also downgraded, or the downgrade essentially also reflects in lower than expected cash accruals owing to correction in the commodity cycle. It's also cited in higher cost of borrowing as a major concern. There's a bit of stocks and news that we have in morning today. We are also going to be talking about Delta Corp, which has come out of the ban, and let's just see how that stock is faring in terms of the earnings. Well, they aren't really looking that pretty, but the stock right now seems to be doing well. It's actually out of the ban. 3.5% of uptick coming in for Delta Corp. Well, the net profitability is up by 1.6%. The revenue is flat. EBITDA remains flat, and the margins at 37.1% versus 37.2% YOY. So a bit of flattishness, at least when it comes to the numbers per se, but there is a change in the management. Essentially, the company has elevated Anil Malani as the CFO. He was the president operation for the last 14 years. It's appointed in Manoj Jain as the COO and Manoj Jain has been with the company at least for 8 years now. So that's a bit of development coming in for Delta Corp, which could be on your list. And we're going to go across to Chandan and check with him on this one. But Plaza Wires, the new kid on the block, which is expected to be listed on stock exchanges, issue price of around 54 a piece. IPO has been, or let's just say was subscribed at around 160 times on its final day. It was led by non-institutional investors, that is 388 times, retail category of 374 times, and institutional played a small role, but 42 times. But Chandan, coming on this one, Delta Corp seems to be doing well. What's your assessment?
The stock was not performing in last couple of weeks due to whatever the structure or whatever the news came into the counter. However, the good part is it has not corrected below 134, 133, finding some sort of stability, recovering after being the beaten down. So I believe some sort of recovery could be there. I'll only play for the bounce towards 160. So with support of 143, one can see a bounce to 160 marks in Delta.
All right, Chandan, we are going to leave it at that. And thank you so much for taking out the time and speaking to us this morning. Well, the lineup seems to be pretty strong today. Sandip Agarwal, fund manager and Sowilo Investment Manager, joins us to take us through what stood out for him for the TCS earnings and what is the three things essentially that stood out for Sandip in TCS earnings. Morning there. How are you doing?
I'm good. Thank you for having me on the show. Yeah, so I think, I am not at all disappointed with the numbers of TCS. I think, markets are always forward looking. So there is a sharp fall in attrition after a long time. And that sharp fall will definitely help margins to be strong in coming quarters as well. And they have signed a very, very strong order book of more than $11 billion. So going forward, you will have a better growth prospect and better margins. So I think the current 50 or 100 bips of revenue miss, I think the investors will ignore. I think it is a very good future outlook, which these numbers are reflecting. So I'm quite positive on the numbers. I don't see any negative in these numbers or commentary.
All right, the hiring growth is perhaps low. The dollar revenue is perhaps at 3-year low. The buyback is lower than estimates. Dividend is not in line with expectation. These are some of the negatives that I've pointed. Don't you see that as negatives? If not, then what really is positive for you?
So see, this industry is all about order book and your employee cost, because employee cost is the biggest cost. If you see, almost 55-60% of your cost is employee cost. So if you are able to control your employee cost or you see improvement there, and employee cost is a direct factor of attrition. If your attrition starts cooling off, then always the cost of recruiting replacing a person is higher, including the process which undergoes and the time which it takes. So if your attrition comes under control, your margins will remain buoyant. And with your strong order book, it may convert after 3 to 6 months, but your outlook becomes much stronger. Your ability to deploy resource in a more efficient way goes up substantially. And I think, this 3-year low growth and all these other factors which you mentioned. In fact, last quarter, someone asked me on another channel that Wipro is holding back the right increments and bonuses and all. Then I said, this is the bottom of the industry or sector, and this is the time when to look at the stocks. And fortunately, if you see last 3 months, both NASDAQ and Indian tech stocks have done well. In my view, what TCS's numbers are clearly reflecting is that we are very close to bottom in terms of revenue growth and profitability. And from here, things will do better. So I think, for an investor who is a long-term investor, this is a very good entry point. That is the way we look at it.
That's a fair assessment there. Perhaps now the stocks have been bottoming out, but do bear in mind the fact that the first 6 months have been good for the IT companies. They've fared pretty decently. But I'm going to come back to you again, Sandip, and check with you. What do you actually make out of something like an Infosys and HCL Tech? Do you see the consumer discretionary also being a concern for them despite the strong order pipeline, which may or may not translate into their revenues for the quarter?
Yes. So in case of Infosys also, if you see the street estimates, they are around similar numbers, 1% kind of growth that everyone is expecting on a quarter-on-quarter basis. So see, this quarter, everyone was aware that, there was a kind interest rate hike cycle which was continuing and still continuing in the US, and there is a lower spending in the consumer discretionary space. So no one was predicting a very high growth for the companies. But the silver line is that while the actual growth remains low, the order book signing is very, very strong. So I think from that perspective, even if Infosys doesn't deliver 1% growth, and let's say similar to TCS, they deliver a 0.5% decline, I will not be much surprised, and I will not expect a big reaction because of that if the order book is good and commentary is decent, and if attrition comes under control. But I would also like to highlight one more factor, that in last 3 to 6 months, we have clearly seen that many investors shifting their weights from TCS, Infosys to HCL, TechM, and the smaller and mid-sized companies, because they have concerns regarding some of the leadership changes which in both the companies have happened. And it is not a concern. They want to wait and watch how it plays out, and they probably are okay to give 3-4% higher premium and come back in the stock once they see the whole thing stabilizing. So that clear distinction is there, that there has been a distribution of in weights and portfolio allocations from Infy, TCS towards Tech Mahindra and HCL and other small and mid-sized companies.
All right, Sandip, I'd also want to understand if you could also tell us a little bit of assessment for numbers like Delta Corp. Essentially, what are you making of it? There is a management change which has come through. Are you tracking this counter?
No, I don't track that counter, honestly. Delta Corp is something which we don't track. And I think it is little complicated because it is not only fundamental, but there are many other components to it. So I don't have much comments to offer here.
So let's actually chat about Vedanta in that case. There is a bit of disappointment which has come through after the rating, India rating now going ahead and downgrading the counter. And this specifically downgrade, I think, will hit home for a lot of investors who apparently were now looking at the company splitting the divisions and perhaps looking at better monetization. And there is one more downgrade which says that the liquidity risk remains for the company. How are you reading into it?
So, see, I think, right now investors are more concerned on multiple fronts. One, that we are in a crisis situation on the international front, and these companies have a lot of impact from what happens outside. They are not consumption companies where, if you can track the economy well and if your own economy is doing well, you should do well. So there is a lot of moving parts which are outside your control, outside the country. So that is one reason why, this stocks in this kind of environment, any which ways, are out of flavor from most of the investors' mindset. Secondly, I think this breaking into 4 companies and value creation and all those things, these are little things which will take time, and investor always wants to carefully see how it happens, how it plans out. And generally, investors are okay to pay a premium when there is a lot more certainty than, buying it cheaper even in uncertainty. So everyone wants to buy something which they are very clear where there is certainty, even if they are paying a premium to get that. So I think that is what is happening in this case and in this script for some time. And this rating downgrade, obviously, I don't think anyone had expected. So obviously, this has come a small shock. But given the price correction which has already happened and all those things, I believe that, there will be many people who would choose Vedanta as a value buy right now.
Right, that's some contra views coming here by Sandip. But Sandip, thank you so much for taking out the time and speaking to us this morning.
Thank you.
All right, let's actually understand more about companies like the entire IT pack, how the TCS is fared, 3 things that stood out for the counter. How would HCL Tech and the Infosys number, what kind of read-through would it actually have on the numbers? To take the discussion forward, we're being joined by Chandra R Srikant, who's the editor, Startup Technology and New Economy put together for Moneycontrol. Morning there. Chandra.
Hi, Nickey. Good to be on your show.
Pleasure is all ours, I'd say. How do you read through the numbers? 3 things that stood out for you. I was just chatting with Sandip sometime back, and he suggested perhaps the worst is now over for most of these companies, and it looks like a positive side. That was more from the market perspective. But 3 things essentially that stood out for you within the earnings.
Right, the way we analyzed these numbers yesterday, TCS, for me, the biggest read-through was, no fireworks. So nothing really bad, but nothing very exciting either. And if you look at the way they've reported numbers, it is a mixed bag. Revenues were a slight miss. 0.1% Q on Q. So nothing to take away there. But I think the two big positives were their margins and their deal wins. So their large deal TCV has gone up. In fact, they've also taken up the target for their large deal TCV from the current 6 to 7 billion per quarter to 8 to 9 billion. So that's a positive. But I think BSNL was a big outlier there. Their margins have also gone up on the back of productivity improvements, better utilization, and so on. But like your market guests have been saying, the positives that people are taking away from TCS earnings is, yes, the first quarter was tepid. There will be a weak second half because second half is typically negative for IT companies. But going into FY 2025, we might just see double-digit growth coming back, at least for TCS, because of the large deal wins. So many of the projects that they won this year will ramp up next year. In fact, BSNL alone could contribute 2 to 2.5% of their revenues. That's the estimate we are hearing. Plus, if they manage to stem the leakage of revenues as projects are transitioning from COVID era projects to some of the new cost optimization projects, that also is likely to be a positive. But for now, it certainly looks like weak growth. Remember, their headcount addition also declined by 6,000 people quarter on quarter. So they are trying their best to make use of existing resources, take up their employee utilization. So I think, unless we see some action on the hiring front, I think that's going to be an indicator that they expect more growth going forward.
Fair point. You spoke about large deal wins perhaps translating into better recovery in FY25, at least in terms for TCS. Would you also say the same for Infosys and HCL Technologies? For Infosys, there was this sharp shocker that was delivered in the previous quarter with the guidance cut which came through. What are you expecting out of Infosys this time around?
Right. So Infosys, as you said, the biggest shocker last time, is the fact that they slashed their guidance. But this time, at least, people expect their FY24 revenue guidance number to be unchanged. So, they will still say 1 to 3.5%, but what they are expecting is that they could narrow the guidance range. So instead of 1 to 3.5%, they might say 2 to 3.5%. But, below this, I don't think that's going to happen. So the guidance per se is going to remain unchanged, but they might narrow the guidance range. And just like TCS, there is a chance that we will see a mild uptick in margins, and their TCV is also going to look healthy. So I think, versus 2 to 2.5 billion average deal wins that they report every quarter, they are expected to see their large deal TCV go up to 5 to 5.6 billion this quarter. So I think that's going to be a strong trend. But again, we'll have to wait from Infosys, to see on how they are seeing the market span out. Is discretionary spending coming, going up? Is it coming back? Or is it more of these cost optimization projects that will continue for the remaining of the year? But certainly, even for Infosys, people expect FY 2025 to perhaps be better than the current fiscal, mainly because of many of these projects coming on stream.
Sure. Let's also chat about HCL Technologies. That's another one which is perhaps going to be reporting in their numbers. There's a glore of IT companies perhaps reporting in their numbers. The stock has done well on YTD basis, perhaps 22.5% or thereabouts uptick coming in for the counter. In terms of dollar revenue terms, do you see a better growth coming in for HCL Tech as compared to Infy or for that matter TCS?
So HCL Tech for the last quarters has been, a bit of a disappointment. But this quarter, at least, because if you look at their revenue decline trajectory, it sort of declined for 2 consecutive quarters. But they are now expected to report a growth, an uptick for the September quarter. But it's not going to be great. It's going to be marginal because the overall business environment remains tough for everyone. So, a quarterly growth percentage of about 2% will still be positive coming off, 2 consecutive quarters of decline. But we'll have to see what they say on the deal wins. Again, deal wins for HCL Tech 2 are expected to be healthy. And if you look at the company's guidance, they had guided to, I think, 6 to 8% in constant currency on the revenue part and an operating margin of 18 to 19%. Back-ended growth is typically hard for IT firms. So, what their annual guidance number will look like or where it will end, that's something that we'll have to wait and see. But I think HCL Tech, there will be some green shoots after 2 quarters of disappointment.
Fair point. Well taken, Chandra. Thank you so much for taking out the time and joining us this morning.
Thank you, Nickey.
All right. Market seems to be flat, but holding around that 19,800 mark. With this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Money Control app.